Hey everybody, just enjoying a beautiful day here, and I was asked, how do you pick a good lender for an investment property? And so what I'm going to do is we're going to stick with hard money lending because that's kind of like the low-hanging fruit. Private lending's its own conversation. So we're just going to talk about hard money because there's a lot of them out there, and they've always been out there, and that industry has changed. Back when I started, hard money was literally, you'd have a person and either it was they were lending their money or they were lending from, some investors investing with them's money. And usually there was a limited cap on it. You would pay high interest rates, you would pay a lot of points, 1 point being 1% of the loan. So let's say you take out, for the sake of simple math, a $500,000 loan at 5 points. That would be 5 times 1%, which is 5,000, so it's $25,000 just in lender fees. And that's what the points are, it's just a lender fee. So you'd spend $25,000 on a fee, and then you'd have the interest rate, which is usually an interest-only loan. And usually the interest-only loans are simple interest, so they're very easy to calculate. So how do you choose a lender in that scenario? Back then it was who was a lot of times people would go with who was the cheapest because they were all expensive. So it's kind of like, who do you really go with? But over time, we really learned the correct answer to the question, which is not who's the cheapest, it's where can you build a relationship with? Especially fast forwarding now with the hard money space, there's been a lot of institutional capital now there. So the rates have come down, the points have come down, but the red tape has gone up, okay? So it used to be, there would be people that would literally just look at the property and make a decision almost on the spot, whereas now there's more paperwork, more legwork involved and so forth. And they take a little bit longer to close. Okay, they take a little bit longer to close. Now, are some of the older style hard money still out there? Yes. So you can still do those, but you're gonna pay a premium compared to some of the lower cost options out there that simply take longer. So just know you actually have both options, but the lower cost options, of course, are much more, I forget what the word I'm looking to say is, but there's just an abundance of them. And with that came an abundance of hard money brokers. So you might have 10 different companies advertising hard money, but at the end of the day, they're not putting up the money, they're functioning as a broker. So they're all borrowing from the same person on the back end. So you might have lender 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, but the people actually funding the money to do the deal is like the same person. And that number of people doing that is a much smaller number. So you got tons of brokers, smaller numbers. So in a lot of ways, that the institutionalized hard money looks a lot like conventional lending in many ways. There's a lot of similarity there, whereas many years ago, that was not quite the case. So how do you know which one to use? Now that I've kind of given you that background, and to me, it comes down to relationship. Okay, who's got the relationship, who's building the relationship, and will get the deal done, and go to bat for you, reasonably, of course, in your corner, to get it done, as long as the deal makes sense. And we're always assuming here that the deal makes sense. If the deal doesn't make sense, then nobody should fund it, because that's actually for your protection. So, and by the way, that's one of the advantages of hard money, is if they tell you no on a deal, that might be the best answer you ever got, because they might actually be protecting you from making a bad choice. So when a hard money lender says no, really examine that answer, why? Because again, that literally might be the best thing you could get, and really just need to renegotiate at that point. But what you want is a relationship. So I did an experiment many years ago where I actually met with 3 lenders in the same room once. And they pitched me, and I literally only had one question: why would I use you? Like, really, and that's really the question you need to get answered, is why would you use you? If the answer is, well, we've got the lowest rates, or we got the most flexible program, it's probably not going to be the best answer. Because at the end of the day, people are doing business with people, and people are lending money to people. Yes, they're lending to your company, your LLC, your Inc., your whatever, but at the end of the day, they're lending money to you because they're putting their trust in you to perform. And you're looking for people that value that relationship. And not only are they going to support you when it's good, but when it's not good, they're going to help you get through that. Okay, they will help you get through it because they want to see you succeed. At the end of the day, if you don't succeed, it's trouble for everybody. And that's what a lot of people don't realize is it's like, it's always a two-sided thing. And if a lending relationship is one-sided, probably not the one to be in. Okay, probably not to be one. I've had the opportunity to meet a lot of very successful people and do a lot of very successful deals. And what I've learned is the unique thread through all of them is there's a strong bilateral relationship in every one of them. Nobody works unilaterally because you can't, it just doesn't last. It just doesn't last. And if you happen to make it work, you end up being like some jerk that nobody likes or something like that. So look for the relationships. Look for the people that don't want just to invest in your deal, they want to invest in you. And by the same token, you want to return the favor, whether it's through more business, introducing them to other clients and so forth, so that there is a bilateral value exchange that's continual. And we've been able to accomplish that with a number of hard money lenders, and it creates a really nice picture that you can leverage again and again and again. So how do you borrow money in the hard money space for your first investment? Don't look for the cheapest rates. Yes, you want the cheapest rates, but first and foremost, look for the people that you've got potential to build a long-term relationship. I promise you the relationship value will far outweigh any savings in dollars that you could get negotiating terms. So hope that helps. See you in another video.